Hello, everybody, and welcome to the Plus Three Futures and Commodities Show. My name is Ben Maldonado, and always I'm here with my partner, Barry Hederachi. We are both back from our tryptophan-induced comas of Thanksgiving, and boy, what a week, huh, Barry?
What a week.
A lot of movement, a lot of action, and we're going to try and cover as much of it as possible. Barry, as always, is going to cover the big five, which is ES, bonds, crude oil, gold, the dollar, the euro, and copper. And I'm going to cover a bunch of commodities, some which look to have top and others which look to have bottom. So we'll know the difference, of course. We've got wheat, cocoa, sugar, coffee, gold, silver, copper, nat gas. So busy show. Without any delay, Barry, let's jump in. What you
Right
got on E-mini, man? Right into the zone. I see it's in your box.
in the box. And we, of course, for Thanksgiving, that week, we didn't do a show. And it's
Right.
not like we even missed anything here because we're basically
we we were violently sideways for the last 10 days.
right through there. Yep.
Yep.
So let's pick it up where we left off. We were talking about, before the week before, we were talking about if we're above 44.75, then our target was going to be 45.85, this area, which is the 50% on the box, 135 degrees up.
Mm-hmm.
And we were expecting that. That was our target, basically, right? And if we can settle above 45.85, then we would expect these highs to be taken out.
Right.
And lo and behold, here we are.
Here
We
we are.
not only did we touch it, but we got through it a bit.
Yeah.
And like we normally do now, let's go and take a look at the 30-minute chart that we post
You know what's
on.
crazy, Barry? I got timing next week.
Yeah, I'll show you some timing. There's some real,
Yeah.
I mean, you'll be talking about yours, but there's something important here. So let's there's definitely some key points coming up here.
And this is a window that I posted like last February that
Ah,
it was that significant. You know, it's a big one,
right. Okay.
long-term stuff. So
Hmm.
we'll see. We'll see.
Well, it's possible we have FOMC coming up in a week, right? So we could certainly be in there.
Yeah.
Um, so this is the 30-minute. As you can see, as you know,
There's the box.
not much happened. We had this. I mean, really, right? We had to thank God for some of the stocks that were moving. Otherwise, we'd be just falling asleep. There's 45.75 was our, sort of the target on the 30-minute that we've been working on Twitter. And that was half a square, 50% of a 180 degree square.
Mm-hmm.
And you can see how we kind of mean reverted to that all week. And
All week.
today we broke out, right? We went back to visit the upper end of it. And the target we had to the upside was 46.06. And we tapped it perfectly. We're there.
Yeah. Yep.
And
Well done.
it worked out nicely. And we've had this, I was looking to say, did we ever mention that? And we did. Here's the Twitter post. This is back on the 22nd, right?
Sure.
You see that? And
Yeah.
we talked about how he settles above 44.75. We're going to hit
4606.
at a minimum, right? And well, I think
Here we are.
we got there with that. So, the question is, okay, so we did all of that, all through here. We didn't have much to say. We were going upside. We weren't trying to sell anything.
No.
And which was the low here, right? We came up, and 43.70 was the thing. And you can see we did a little bit of a dance there. Then it was to take this out, took it out cleanly. After that, as long as it was above that, we were going to go up and hit this 46.85 level, which we did.
Right.
So far, all good. We weren't trying to do anything. Now, you said you had some timing coming up next week,
Yep.
and it's always good to be alert to these things. So, what do we have coming? Well, I have, and it's good to look at different lenses, right? Different angles.
Yeah.
I have,
Yeah.
we have 36 calendar days coming up. Okay.
That's big. Half of
July.
72. Yep.
Yes, that's there. And the other thing is, if you go up to the old high, we're coming up on 90
Oh,
high to
look at
high.
that. High to
Okay.
high. Nice.
Now, this is a perfect opportunity for all kinds of shenanigans. Um,
False
especially
break, anyone?
what's that? What's that?
False break, anyone?
Yeah. Well, that's the thing. You don't want to, let a good double top go to waste.
Right.
And so here, I mean, it's funny, when you think setup is perfect, when everybody's like, "Oh my God, everything's bullish," then something shows up, which
Oh,
we
it's
can't even
crazy.
construct this. It's just there. This is the
It's
square.
there. Yep.
The bars are there. It's not like we can make it up. But here we are. Everybody's bullish to the wall, and we're coming up on 90 by 90 high to high.
Yeah, which is big.
And
That's
well,
big.
yeah, it's big. And well, 90 is huge, right? This is a square of 90.
Yeah,
We use 90
huge,
as
huge,
a
huge, huge.
template for everything.
Hmm.
And it's 360 divided by 4. And it's
It
cycle
gives you
wise,
your 45s, your 180s,
the whole
everything
thing,
comes
right?
off of there. Yeah.
And if anybody's doing Gann work, you understand how important 90 is and the
I mean,
divisions of it. And the other thing is the low came in, it was 270 low
that
to
was
low, right?
another vibration of
Right.
90. Yep.
So that, and then now we're running up high. So clearly this could be some kind of inflection point.
Yep.
So we have to keep that in mind. We got to target and we have timing coming in, right? Those are two
The
things.
other thing, Barry, from a positioning standpoint, everybody and their dog is waiting for the Santa Claus rally, is expecting it.
Mm-hmm.
Oh, we're going to rally into Christmas. Oh, we're going to rally into the holidays and the year end. So
You
it
mean
would be
from here?
I'm talking about
Like this
just the
this rally
general
continuing?
expectation
Yeah.
because of the time of the year.
Mm-hmm.
So a hell of a rug pull would be to not to yank it to yank it right here.
Well, for them to be efficient, they're gonna have to yank both ways, so everybody gets
Yeah,
screwed, right?
yeah, yeah.
That's the way to do it. So let's see. Well, let's see what's happened. So we have 90 high to high,
Yep.
and if you look at this, we're up. Well, let me put the 1/3. Well, that's not gonna look. Let me put a six square 60 on here.
Hmm.
So if you put a square of 60, you can see we're up 60 degrees, which is one
Tapping it.
third of the
Yep.
90 we were using, right?
Hmm. Hmm.
So we're up 60 off the low. We have 90 high to high. Okay, well, it's something that we definitely have to notice. It can't be ignored. That's
It's not a guarantee that it's going to top, but it's something that you have to put in your mind and watch, see how it plays
well,
out.
you want to add up the coins, right? So we have
Yeah.
price
Yep.
and we have time.
Yep.
So we have the two things that we're looking for
That's
for
correct.
inflection point. And in this case, we have that. Well, what was your? You said next week you have some. So here we have 30 count trading days on December 8th, which is next week.
Yeah, I have a cluster next week into like the early part, like the 11th, 12th of December. So
Mm-hmm.
it basically starting from the 6th.
Well, 12th is very close to the 15th FOMC, so all that is
Yep.
there too, right?
All in there. Yep.
But anyway, let's just stick with what we can see.
Hmm.
And so December 8th will be 30 days out, but we have 36 calendar days, and we're up 60. 60 could easily be 64, which would be right around here, and that would still be within this vibration of 36 or 72 rather. So it all lines up. So we have something here. Now, I talked about how, we don't want to let any good double top go to waste. Any
Right.
old double top really wouldn't mean much, but if you have a tight count between the highs, it means a little bit more. And
Right.
so here we have 90 high to high. And the important thing here is if it's not held and we happen to settle above, and here I'm willing to say if we can settle above 4606, which is 60 degrees up where we ended its leg this week, right?
Hmm.
With all the buying that came in yesterday and all of that. So let's say we ended there. If we can hold above roughly, let's say 4,600. When I say hold above, I mean we trade above here. Let's say we go to 4,650, then any kind of a pullback is holding above this line. Then we might have enough legs to get up into, maybe go up into the FOMC and then sell off, right? That would be a hell of a thing to happen.
Mm.
But anyway, I'm just saying 4,600, 4,606, 4,600. You want to watch that level because it's 60 degrees up and it's 2/3 of the master sort of square that we watch. So it's a really important level. And we have two counts. We have 36 low to high. We have 90 on
90
the
high
high.
to high. Yep.
And that's enough to be cautious.
Mm-hmm.
And since we've been sort of talking about the long side this entire time, not that we're going to stop that, but we had two places where we were kind of cautious, and they
Mm-hmm.
were roughly 100 points apart. So that one was 43.70, the next one was 44.75,
Right.
which we didn't even get to talk because he went right through it. So
Yep.
get to the third target, which was this 45.85 area.
Mm-hmm.
So far so good. I would say here, this is we've been joking during the day, all the every time you sold off and the market got bought up, we call them round trips. And at the end of the day, I've been posting like, it's time to get off the ride. We did the round trip. Now it's time to exit. So
Mm-hmm.
this is kind of one of those points. If you're holding, this would be a good place to remember to say, well, it's not a bad place to cover some.
Mm-hmm.
And just like 43.70 wasn't a bad place to cover some, 44.75 wasn't a bad place. And the
Mm-hmm.
reason is if we settle above this, we'll have plenty of time to re-enter it, right?
Mm-hmm.
Which less risk because now we
Right.
know we can hold above a certain level. Here, it's not a good place to enter because it's below the level and we don't know which way it's going to settle. It's too early.
Correct.
So if you're consistent with that kind of an approach, it's too risky to get in here if you haven't been in there. This is not the place to begin your long trade, right? That's the point.
Agreed.
It's
Ag-
more of a place to end your long trade.
Right. I have weekly full square resistance just above at 46.33. So right in that neighborhood.
Yeah, I think, looking at the high 90 days ago, so if you go back to the July high,
Mm-hmm.
which was 46.34, and
Mm-hmm.
your number is 46.33,
33. Right there. Yep.
right? So we have two highs here. We have the July high right there, and then we have the high from what was it, last
March.
March,
Yeah.
which was right around 46.30. So we have
Mm-hmm.
basically three highs. The question is if we can get above, the reason I said if we can get above and hold above 4600, with that being in place, if we can get above and hold above this, then we're probably going to go test this at a minimum,
Agreed.
the high.
Yep.
And there we're going to get some kind of a show,
Mm-hmm.
if not here. So that's basic setup is that. The level we're watching for this stuff to unfold one way or the other would be 4600, 4606. So you're watching that very closely. And with that kind of a sideways, I mean, if you want a rug pull, that would be a false break
Right.
right there, you know.
Right.
And if the reversal comes below this level, like let's say 45 and a half, I would guarantee we're going to go down into, for a while, right?
Mm-hmm.
That would be a good rug pull.
Right.
So that would be that.
So
And
what are your key numbers for next week, above
well, the
and
key
below?
number would be 4606 is all I have because if we can get above that,
Right.
well, we can go a lot higher. There's really I don't have a target for that.
And as they often do, they're closing right near it. So, it
Well,
leaves you
heck,
in
look at that
suspense.
60. They're closing right on it.
Right. Right.
So, I don't have much to add to that other than to say it's been it's been a 30-day ride.
Mm-hmm.
Um, and that's pretty good for a run,
Yeah.
especially one that's this steep. And when everybody's getting long, you can hear the sentiment shifting here, right? Just like you said,
Yep.
you
Yep.
know, talking about Christmas rally, end of the year rally.
Mm-hmm.
Well, that's great. It could happen, but we always want to watch. We always want to stick to the numbers and the pattern and the structure, and we want to always look around to see what's
It goes
happening.
back to your mantra. Where are we and how did we get here?
Exactly, exactly. Well, now we know where we are.
And we know how we got there. So
Exactly. And
it's
there's only two ways to unfold it. All has to start from 4600, and we just happen to close right there. So there you go. It makes it very easy for next week. Either we're going to be under it or we're going to be above it, right?
yep.
And because we had the 90 counts and the 36 counts, if we get under it and we start lower time frames start making lower highs and whatnot, well, that opens up a lot of downside, and we can get it down If it stops around here somewhere, we can get down to 43.70, and that
Easily.
would be a healthy correction,
Yeah. Yeah.
right?
I'll
So
tell
that's
you,
mhm. Go ahead.
Hollywood's got nothing on Wall Street because Wall Street gives us cliffhangers all over the place on a weekly basis.
Well, some people would say on an every half an hour basis.
Right, right, right.
So, but definitely on a daily basis, weekly basis.
Yep.
So let's look at the weekly chart. Weekly, let's see, you just mentioned about, how did we get here?
Hmm.
Now, the top, well, just like the 90-90 high, you guys, this is why high to high counts are important. Look at this. What
There's the
happened here
yeah,
was
perfect example.
right? This is a very good example of, 81 weeks high to high.
Mhm.
And that just
And
happened.
look at the reaction. That was a nice reaction too.
Yes, it was a very good reaction that we got down to 50% of the square.
Hmm.
Just like I mentioned on the daily, just to make a quick point. So here's 50%. If we get to here, it still be very healthy. And that's the same thing we talked about when we were up in here. This would be a
Hmm.
healthy correction because
Sure.
that's 50% square. And you can see how it was healthy because it got bought right up, right?
Right.
And from there, long as the levels held, we just kept on it. And here we are.
Hmm.
They say if you're up three weeks, that's more than 3 weeks, that's a bull trend. So
Hmm.
let's keep that in mind. Sure, we can do another double top here, but there are double tops up here also.
Right.
Um, what else did I want to say about this? Well, we're back in the channel, so the momentum's back in place. Yeah, it got sort of withered here, but we see how fast time had to work to get it back,
Hmm.
in place. So the momentum level is pretty much in line. We're back inside the channel, the old channel, and we broke all the downtrends. So you would think the coast is clear now.
Hmm.
Yeah. I mean, that would be the thinking, right?
Which is the exact time you got to have your head on a swivel.
Exactly. Exactly. That's exactly the point. So
Right.
let's see how it works out. Here, I'm just saying, the low worked out okay. Now we're coming into some timing, so we have to be just a little careful in how we look at this.
Hmm.
And this 81 is kind of a special square. I'm not sure how long, it can continue to give us the safety. But
Hmm.
if you go from the high to low to high, it's been working perfectly.
Yes, it has.
So it's one of those things, and if that broke, you just really don't try to do anything with it.
Where's that full square timing wise?
Well, my God, if it happens again, that'd be like once in a lifetime thing.
April,
Um,
May.
yeah, it's May
Hmm.
6th, first week of May.
Hmm.
And
Interesting.
yeah, yeah. I mean, that would be a real deal there. Whatever the case, you guys, I don't think it's gonna be boring from here on.
No,
I think we're
no.
having really, it's like fast times at Ridgemont High kind of a,
Right,
probably exactly that kind of sentiment. So,
right.
all right, that's all I have for the
No,
evening.
that's awesome. Really good
Good.
coverage.
Oh,
Yeah.
thanks. Thanks. Let's look at the bonds next.
Interesting moves there.
Hmm. So bonds, the deal is, let's see what's happening here. Well, we came down 144, and well, lo and behold, we did sort of turn on the square. And
Hmm.
I didn't expect it to have a reaction past the 50% or 72 square 72.
Right.
And we are moving higher. Fine. So then we'll drop down to structure wise. Really 119 to 120 is really where the resistance is. Sort of by the book, right?
Yep. If you put an ABCD on there too, it targets about 120 and three quarters, right in that area.
Oh, right there. Oh, let me do that.
Yeah. Yeah.
There's
You can
always
see
good
it.
reference, man.
So just above, you'll see it.
Oh, right there. Okay.
Hmm.
So that would be, well, yeah, it's perfectly within reason,
Well, yep.
let's say. And especially because we took out the 72, right? Because
Right.
before I was talking about the meeting point here being really, really important. The fact that if it held, great, we're done, and then we'll maybe consolidate here for a while. But
Right.
the fact that what I really wanted to show was, let me expand this a little bit.
That's a perfect example of clearing that level right there.
Exactly. I'll show you.
Yep.
So here, what happened was, we set up against the 72. We had the downtrend line, channel line, came back, broke out. Here we made air, right? Perfect
Yep.
up bar. Next bar, the one I'm putting the line on right there, came back to check back
Test it.
to the 72, right? So
Yep.
and that holds, and the next day it comes back to check and quickly gets bought up. It's going to go, which is
It's yeah. Yep. That's what happened today.
so that's why, like the same thing with the ES when we're talking about the ES and saying, hey, if it clears above 4,600, I mean, this doesn't happen all the time. This is the kind of setup we were looking. We want it to clear, come back, and you can re-enter the position here with a much less risk. Then after this entire leg, you're trying to get entered here. I mean, it's just
Right.
suicidal, right?
But it just turns into a coin flip as opposed to having the odds strongly in your favor.
Yeah, well, it's not even a coin flip because we have all this. It's
It's
worse.
true. That's
Odds are
true.
against
Yeah.
you.
Worse than a coin flip.
So you definitely don't want to get involved. But your ABC, yeah, ABC is that's probably a good range. It's going to be somewhere between 19 and 20. That's where it looks
Mm-hmm.
like we have this all that overhead, right? If you look at that,
Yep.
I mean, ideally this ABCD would be perfect. But if you look at all the reactions, this is in line with all of that. And
Sure.
because we kind of squared out, it's going to probably take a little longer before we turn down.
I mean, look at the June to August ABCD. Same thing,
Yeah, yeah,
you know, last year
yeah.
on the correction.
Mm-hmm. This one, right?
So yeah,
Time
that
line. Yeah.
exactly that
Mm-hmm.
one. Yep.
All right. Let's take a look at the weekly.
Same story. Cleared the 144.
Same story. So 114 was our level that we were watching as a downside target, right? We
Mm-hmm.
got there, we went a little below, came back up, and that happens to be 144. That's why it was important. So I think this consolidation area is the overhead I was talking about.
Mm-hmm.
And I mean, clearly it's there. So we'll see how so that's around 122.
Mm-hmm.
And we could certainly get to that and still be fully in a downtrend.
Mm-hmm.
The thing with this low was we didn't have, I don't think we had anything major at that low base.
Wasn't great timing.
It wasn't, right? From what I remember,
No.
it was 90. Yeah, it was off a little bit. Didn't quite
Mm-hmm.
have it. Even from here. Yeah. And I think that's why I was a little, I didn't want to call that like the low in bonds. I don't think it's going to be. So let it mess around and, start
It's
again next year.
it's kind of doing what we said, which was it's not the low, but it was a tradable low that we expected a bounce, and now we're just trying to triangulate where this bounce is going to go to.
Mm-hmm, mm-hmm. And And speaking of triangulating, I mean, here's a true two trend lines that triangulate
Mm-hmm.
this. So
Mm-hmm.
within that cone, that's a possibility. And the other thing is we're also set up for a perfect three drives if it works out. I mean, this is really looking out into the future,
Sure. Oh
but
wow, yeah. Put another
you never
box
know,
on it.
right?
Yeah.
So let's say if that's the case, that third drive wouldn't be till end of the
Ne-
year.
Next October.
So you very possibly rally up into that May time frame, or
Mm-hmm.
and so all of that is possible. But for now, we're looking at 120, 90 to 120 being sort of the resistance here.
Mm-hmm.
And we got the signal that it's not going to be a quick, weak correction once we closed about 114. I just want to remind people of that
Right.
because we are using those squares for that. All right, let's move on to crude. The one sleeper market for the week.
Yeah, it was relatively quiet.
I shouldn't say sleeper, lower time frames, so we're just going nuts.
Yeah. Yeah.
So here, if you guys are following, we did the ABCD up, looking for a correction. We said if the market's first strong, we'd expect it to hold above 83. And you can see we came in there, had a little bit of a tug of war, and we slipped. Next level, our next support level was 73.50, 73.50 area. We stopped there. And you can see we consolidating right above that. And that level is important. If you look back, we have all that flooring under it. And so there's support. We just have to see, you know, how well it holds up so far. The consolidation looks okay, you
Mm-hmm.
know. Um, it should hold about 73.50. Well, it's possible we get down here from make a square. If it was perfectly 60, that would work out. But let's see. Let's see what happens. For now, um, not much to say. I think long as we're above 73, 73.50, it's stable. Not in a strong position, but we could run. I mean, this is the ideal block would be 73 to 83 block.
Mm-hmm.
The weaker block would be 65 to 73 block. So again, we're right in the middle, right next to 73, 73 and a half. So let's see how it works out next week. I don't have much to say because we're kind of in between things.
Yeah, the only thing I could add that might help is there on a 4 hour, if anyone wants to drop down to a 4 hour, you can see an ABCD in progress that targets around 72.21.
Ah,
Just to do a little false break probably.
yeah, yeah, that would work out.
So if you
All
go
right.
down to your lower time frames, you can see the structure of that.
But for now, 73.50 is what we're watching to see if it can
Mm-hmm.
consolidate above or we can move a little under it.
Mm-hmm.
Because really not much else to do there if it's going sideways. Crude, well, the weekly doesn't look that much different. We're consolidating right above the
Right above your half
line.
square. Yep.
Yep. And between that and the block we had above, so we're squarely between that. And this is why the 73.50 is important. If we slip through that, we're going to be on the lower side of the square. And that's a weaker part, right? Although we have this block written over here,
Mm-hmm.
maybe extend it.
It just puts the pressure. It changes where the pressure is.
Yeah, yeah. You have anything to add to this?
Nope.
No.
Looks good. I think it's you got the numbers to watch.
Mm-hmm. Well,
One of the stars of the week.
did really well. Some of
Yep.
the metal stocks even moved this week.
Mm-hmm.
So
Oh, you've been all over that since it did that ABCD too in October. I remember it was like, pay attention here, people.
since this came in, right? Yeah,
Yeah, yeah.
yeah. Remember how bearish everybody was?
It was going to 1600.
Yeah, I think we were
Everybody
like the
thought.
only bulls around at that point.
And it was just based on not that we're like soothsayers or anything, but if you look at the weekly and the bigger time frames, it was just right in support.
Mhm.
You know. So
So
anyway, go ahead.
yeah, well, we ended up, um, we covered. You guys know we cover all this, so we're back up at up it towards the highs. We cleared 2000. That was our main thing. We've been talking about clearing 2000 was important, and well, now it's out of the blocks.
Speaking of that, Barry, this is the first ever monthly close of gold over 2000. First ever,
Man, I didn't know that. Well, I
which is
should know it
why
now.
hard to
Yeah, it makes
believe, right?
sense.
Hard to believe, but because it's
And
been up
how
here.
it's kind of outside the news, right? Unless you're a gold trader, it's not
Yeah.
headlines.
Nobody's celebrating it, or
Oh
CNBC's
no,
not blaring the headlines,
right,
gold
right.
closed over 2000.
That's amazing. Yeah, yeah. And
Yeah,
I think
first
that's something
monthly.
we shouldn't ignore.
No, it's important.
We shouldn't ignore. Something is up. Why would gold be up and the Dow be up so
Remember,
strongly?
gold, yeah, remember that's exactly right. Gold is up, the market is up, oil is down. So the geopolitical, the Mideast is going to explode. The oil's not reflecting that, but gold is telling us something's going on.
Right.
And inflation's down.
Yeah. Yeah. So something new. We're up.
Right.
Right. Something is up. I mean, there's no way this is going to happen.
Right.
But we don't know what's up, but we do know the market's up. So that's all we want. Anyway,
Whatever's up is good for gold.
that's right. So we're up above the 60 mark, and the 90 is way up at the 2190, let's say.
Mm-hmm.
ABCD is 2132.
Mm-hmm.
So there you go. If you're positioned all through here, I would say just hold on. We don't have anything yet. So we'll just play it out.
Yeah.
That's all.
Looks excellent.
Trending.
Mm-hmm.
That's the problem, when it's not trending, we have a lot to talk about, but when it's trending, there's not a whole lot to say. And
Right.
every idiot knows it's trending at that point, right? So it's like
Right.
redundant to even talk about it. Right?
It's just knowing, and the things we try to give people is places where it's logical to take some profit, logical to,
Mhm.
step aside a little bit. And that's the key thing with these levels.
Well, what's cool is to be, how confidently bullish we were through all of this, this kind of washouts,
Hmm.
and to witness this to come in so cleanly.
Yeah.
And look how clean that move was, ABCD up, right?
Yep.
Very clean.
Very
So the
nice.
big deal was really about closing about 2000, and we did. And I think I remember saying, if we clear that, we're going to end up at 21 in no time. And there you go. In
Here we
1 week,
go. Yep. Yep.
practically one day,
Yeah. It's true. One day.
right? We're went from 2000 to 2100. So there we are. And 2100 is, that target is resistance. So I'll do some work next week on this. But for now, we're breaking out. Can this possibly be a false break? Yes. Has it been a good run? Yep. Should you be taking profits? Well, you could take some. You can also pull up stops, if it's a long-term trade.
Hmm.
And the next thing is, if we can clear above this and like hold above next week above, let's say 2050,
Right.
it's really in good shape. I
Yeah.
mean, it's in good shape even above 2000 because that was a point to break
Yeah.
out of, right? So we're,
Right.
we got plenty of space to consolidate. What to notice is look where we are, just like you said, look how, look where we are. And I think it has to be respected and noted, gold making highs like this. Yeah, I think everybody should know.
Yep.
All right, let's move on to, let's go back to the
There's another one that broke out.
broke out, called it out,
Yep.
everything. You know, we don't have a lot of copper traders coming in, but we have enough. We
I'll
have
tell you what, the metals loved this Rebel Yell cycle. They all took off when the cycle came in.
That's right. That's right.
They all did.
Yeah.
It was a really good hit for the metals.
Mm-hmm. Well, they did well, and we caught the lows. 354 was the low we were watching. Did a false break. We talk about this false break here and said, hey, that's a false break. If we can hold above that, we're probably going to go. We went up. Here's the first counter trend came in. Then once that got above the 50% line, this is where our lights turn green, and there's your move.
Yep.
Right, low risk again because we wait for it to clear, and now we're moving higher. Looks like the ABCD should come on right up in there. Take a look at that. No, no.
Yeah, the higher one looks possible.
Yeah, that's what I was trying to go for actually.
Hmm.
There you go.
Right at the
So
$4.
$4 copper, yeah, why not?
Hmm.
Which is interesting with the Hang Seng going straight down. So
Right.
no joke, right? I mean, you
Right.
think there'd be some kind of a correlation here. I mean, look at this, right? We're making new lows for this leg.
Yeah.
So there's definitely something up. Normally, even these two correlate a little bit between the
Right.
ES. So,
And everybody and their dog is looking for a recession now. Why is copper rolling higher?
mm-hmm.
Being that, it's an industrial metal used in a lot of,
And this is not a
heavy
small move,
industries.
man.
No,
These are
it's a
huge moves.
good move. Good
So,
move.
so we don't know what's up. All we know is charts are telling us something is up.
And discounting it. Yep.
Mm-hmm. So, all right, what do we have? We have 50% square to look forward to, and that is, well, it's right around $4, 404. And now it's once we get above that is where we can really charge, right? So right
Yeah.
here, we're still correcting. We're kind of moving up, and these two legs haven't, we haven't um, gone up greater than the last leg. So which is,
It pushed into your champ back into your fork though, which is interesting.
yeah. So the momentum, that it's
It's
back,
coming back.
it's coming back. We
Hmm.
do have an ABCD. Let's see, like we said, $4. Let's see what happens at 4. Looks like a good spot.
Sure.
Well, that's it for copper. Do you have anything to add to that, or
No, I think your
good, right?
$4 area is a good spot. We'll reassess.
Let's move on to the dollar. What's happening here? Well, we have an ABCD heading down lower into around 101, our old area.
Hmm.
And that is sort of a support block down below. The thing here is we got under the 90.
It looks like it wants to battle at the 90 again. That's going to be the key spot there.
It's the skis, yeah, again.
Hmm.
So, 103 and a half was the 90. And we slipped under it. Then we came back to check it out, but nope, got turned back down again. We'll see how it works out, but it would be reasonable for it to go all the way back down to 101. It's,
Hmm.
it's okay. And you can see the ABCD comes right into the block here, right?
Right.
So let's see.
We just got to see the result of that battle, above slightly above 103 there and see what happens at that 90.
Yeah, it's really about being able to hold above it or not. Otherwise, we're going to get back to 101.
Yep,
We'll have to check that out.
I
And
think that's right.
but overall, though, this we can check this on the weekly also. We had this 107 and a quarter being the target that whole
Hmm.
time, coming
Yep,
off this low, and we got there.
yep,
And the thinking was, long as we can hold above the 50% of the square, we can take that out and go ahead and make the 90.
yeah,
But the fact that we consolidated there for a while, but they couldn't really hold above the 50, we started dropping bacon below it. Well, that's the time to just sort of wait and say, okay, it's doing something different. Now it's not as strong as it was. Now it's shifting into another mode. And that's when we started, trading lower.
sure.
Now, in the bigger picture, we're still, if you look at it as 1, 2, this is a higher low that's getting made in place, even if it does an ABCD on the short leg. So I think giving it the time it requires is the thing to do here to finish off, because I think the low that came in is very good. And if we put the 90, the square that we've been using, and put it up at the high, we do have a good square coming up right around 101 and a half, almost
Hmm.
102,
Hmm.
101 and three quarters on December 5th. So it's possible we go down into it. That would be, I mean, ideal, like, you know, textbook ideal.
Right into that timing window.
Right into the timing window, right into the ABCD. Everything would
Hmm.
come into down to that spot, and it would be perfect because we're smacking. I mean, look at that where that 50% goes in. It's
Sure.
smack in the middle of that block, right?
Yep.
So I'm looking to see, unless we can, really hold above um, 103 right away, then I think the next support is around 101 level somewhere. And we'll figure that out when we get there. But at least 45 degrees down is reasonable. Okay.
Hmm. Hmm.
That's what I wanted to point out. And I think holding there will, we can continue the dollar to go move higher. I think this leg here will have to finish up soon. I mean, 45 days is pretty good for the dollar.
Sure.
And if that somehow slides, then I think we can go off of this high.
Right.
And that'll put us right at the new year. What is it?
Yep.
Well,
Early in the new year. Yep.
January 2nd, 3rd. So we have potentially two targets to look at to the downside if the 103 level fails. That's what I
Hmm.
have for the dollar. Anything you want to add to that? Any?
Nope. It looks good.
Yeah. So looking at the weekly dollar, so this is the thing. On a weekly basis, we're well above the trend line.
The normal pullback.
Uh-huh. And long as we're above the 90, I mean, dollars in a very strong position. 90s, it's 100 and a half, but let's say it's 101, even if it's go up to here,
Right.
that entire band, in here, dollars very strong place. So let it be. Now, the one thing to be said for this 102 and a half low that we came into, how I always look for geometry to sort of
Sure.
figure out what's happening, right?
Hmm.
And we did come, we came pretty low here. We took out that low. And there's another way to look at how legs can balance out, just like an ABCD. I call these like
Hmm.
the reverse ABCD,
Hmm.
which is to match, this leg to that leg.
Sure.
And if you do that,
Oh,
then
nice.
we came right to that.
Yeah. Very nice.
And so that's 102 and a quarter or so. So it looks good. Looks like, we ran up, corrected the normal amount, what's normal within expectations of some kind of a correction, especially on a weekly chart. It looks okay. and we're well above the trend line. And why am I talking about all of this? It's just to say I think the uptrend is still intact, and this is just a correction.
Mhm.
Yeah, I think that's a good way to look at it.
Sure.
And if it can hold above this 50 to 45 degrees down from this high, it would be textbook. That's it.
Very good.
All right. Let's move on to the euro.
Look at the inverse, basically.
Yep. And I found this ABCD that ran right up
Very nice. Yep.
into the high. And, just like the dollar low that we just talked about, right? So if that's the case, we kind of overshot the ABCD, but, let's see how it handles here. But I would really like it to break through 108 just to make it easy.
Hmm.
But if you guys want the 50%, it's 108.88, right? And 108.8 would be the 1/3 of the square, not the 1/3. It's just always line from the weekly. So
Hmm.
108 is the other really the major support, and we want to take that out, and that would begin the next one. But 108.888 will be the short-term level to watch. And I'm not really thinking long on this at all at this point because we did finish the ABCD. Okay, we're good.
Very good.
We did have a 90-90 there too, with a false break. That's how I look at it.
Yeah.
So that's in play. Let's go to the weekly. There's our 108. That's where we got that.
Hmm.
So long as we're above that, I would say it's a positive kind of consolidation, and it's probably going to go longer. And if we take out 108, I think this was just sort of this is just a good strong correction. And now we're going to go on back down and make new lows.
Sure.
Yeah, we'll leave it at that.
Hmm.
Because we did finish this big leg. That's why I leave it up here to show that we finished
Yeah.
that. Therefore, there's no way it's going to go up and make new highs here or even take out this high. So
Right.
it's something that's going to happen here. So we're trying to catch what that is. And we can catch it to the downside if it's 108 or lower. And somehow we manage to consolidate here. We get some kind of a buy. Okay, there's a few points here to play to the upside, but I don't know if it's worth it.
Sure.
I think that's all I got.
Very good.
There's your 90.
Hmm.
You're going to cover natural gas, right?
Yep.
Okay, still making higher lows.
Yeah. Just boring people right
Oh,
now.
hey, I wanted to show you this Dow chart. It's kind
Yeah. Let's see.
of, I've been watching this for a while. We don't talk about it every week,
Hmm.
but the fact that it was so darn strong, we took out this 35, let's say 35,590 level
Right.
that I had marked, and look how strong it is compared to everything else, right? We're at 36,375.
Sure. It's almost taken out the all-time highs.
That's right. So just to say, there's a lot of money flow coming in here, and that's the only cautious sort of the yellow flag I had about the 90-90 and all the things setting up, right?
Right.
And to say what's really important from here on is the pullback that comes off of this leg. Obviously, this is not going to continue forever. So wherever we terminate this, the next pullback is the thing that's going to be really important. So we'll be watching that, and I'm sure we'll be talking about that. So
That's good.
yeah, let me put it back to you. Let's cover all the
Okay.
commodities. All right.
Let's buzz through the commodities.
Yeah. Well, speaking of higher highs and higher lows,
Yep. We'll start with Bitcoin.
grinding through that, grinding
It
through it.
it really is, and it hasn't been difficult to analyze or trade because it's basically respecting the full squares and the half square. When we get above the full square and clear, like here, we move up to the half square, clear.
Mm-hmm.
We battled a little bit here, quite a bit actually. Month and a half, 2 months here at the full square. But as you said, we saw these higher lows and higher highs, and today we pushed up and we're closing, above the
Strong
full
close.
square.
Mm-hmm.
Yeah, very strong. So,
With gold, along with gold.
yep, the key thing, guys, is look at the square here. It's call it 37,820. As long as we're above that on any pullbacks, it's bullish, and we're opened up to now the half square up here, which is around 42,360.
Right.
I mean, there's not much to add. The key is here because if we can sit on top of the full square, not only we're sitting on top of that, but these previous highs will be support now. and it'll be a platform to move. It's kind of boring, but it's grinding higher.
Well, when it's boring is when you really got to watch it
Yeah.
for a couple of different reasons. But here we had the potential for three drives. If you look at the two drives, the first big day we had in October,
Mm-hmm.
and the first time we touched the square. No, no, okay, the next one right there, right?
Mm-hmm.
That's one high. The
Yep.
next high is the next big day, touching that one. That's two.
Yep.
This could be the three. I mean, they're pretty well evenly spaced.
True. Could be the third drive.
And so we got to keep that. And the reason I say that is there's a lot of divergence happening from the point of view of momentum, right? Because of the way
Sure.
we were grinding sideways. So anyway, it's there. And the reason I mentioned that is it's happened before, like in April high, same thing happened. So I was looking at that. See how we were sitting under that square?
Yep. And then we pushed
And it
up
broke out, and yeah, I
and
spent
then
a couple of days
lost.
up there like there's no problem, right? Then we sold
Right.
off again.
Yep.
So,
Same thing here. We pushed up above,
it sold
stayed
off,
on
right?
top for a while, and then we
Mhm.
sold off again.
So you want to kind of, yeah, it's nice up to here, but the higher it gets at that kind of an angle, you want to really start watching a little bit closer.
The key is the levels, right? Watch the levels.
Yeah,
They
watch the
they
levels.
won't they will not mislead you. That's the good thing.
Mhm.
While the news can, and sentiment and your buddies and everybody that gets
Your
hyping
eyeballs.
something, even your eyeballs, yeah.
But hey,
The,
oh, one other thing, that level right there, okay, actually broke pretty much where your square is. It's 180 degrees up on my charts from the low in November of
yeah,
2022.
perfect.
So it's 180 degrees. So that with
Mhm.
three drives thrown in there could be something. So we'll watch that.
Yeah, we'll watch it.
Yeah, but the level's the
All right,
key, like you said.
absolutely. Let's go to the NQs because this is interesting to see. So NQs, unlike ES, we took out the July highs already. But this is an interesting structure in that we topped right on the 50% of the square,
Mm-hmm.
and then we a couple of days ago we made a push up on the 29th. We made a push up, made a new high, and immediately reversed. So I'm watching that to see, is this a false break? Was this a failure? And obviously if we get stuck below this half square, that'll tell us it's a failure, and things are pointing down. If we can get on top of it and sit on top and clear it, we open up the full square up here, which is around 16,780. So for me, the key level here is this half square, which is 16,180. Below it, we got to be cautious. Above it, we open up higher prices yet still. And the same thing you were talking about with Bitcoin is we're running out of momentum here,
Mm-hmm.
because of the sideways and the spiky nature of that one high.
Right.
We also there's from this high here, we did 54 by 27 at this high, which is a decent square.
That's a really good square. Yep.
Yep. So we got a 54 by 27 with a false break into a half square resistance. That's one to take note of. And on the weekly, I wanted to show you this next week. So right here, this bar that's coming up next week, right at this 3/4 line, will be 90 by 60 from that September low. From here, 90 by 60.
Well, okay. So from the let's see, what year is that? That's 22, right? Yeah.
That's 60 weeks. So that's October
Uh-huh.
22. Here's 60 weeks by 90 degrees price wise higher,
Because
just
it's
slightly
basically
higher.
that ends up being, I have 360 days for December 5th.
Mm-hmm.
Makes sense, right? From trading days, I mean, from the October low.
That's right.
Yeah. Okay. Right.
So it's
That's a
again,
big
it's
deal. Yeah.
it's another instance of timing that next week's price action is going to be really important, and we have to watch it. Yes, right now it's looking like we broke out of the triangle. We're above, we broke above that previous high that we had in July. So everything's looking bullish, but it's right into a timing cluster. price and time in this case, 90 by 60 on a
Mm.
weekly basis, in addition to our other cycles that have, nothing to do with this chart specifically. So it's something to watch. Obviously above this half square, it's still very bullish. So if you're looking on a weekly basis, 15,600, 15,620 area, if we can sit on top of that, that would be bullish. But the reason I wanted to show this chart was that timing of that 60 from the last October's low in
Mm.
October of 22.
Mm.
Anything you want to add on the weekly?
Well, just the 360, and your weekly count, same thing. It's really important. So let's watch next week. This December 5th is where the 360 comes in, and you have other timing points. So yeah.
Absolutely.
Mm.
So it's pay attention time for sure. All right, let's jump into some of the commodities. Let's start with wheat. This is early, but it's promising. And if you go back and you look at the old shows, you'll see that a lot of times in these commodities, I try and give you sort of a heads up when a turn is coming. It's in advance of a big move because we want to be prepared, and you have to figure out your own entries if you want to trade it. This is how I like to do it. I like to identify the corner, and then as the story unfolds, I can increase my exposure and risk in the market that we're talking about. So wheat's here. We noticed this low in October. There were squares here. There were divergences. It was a good low, and the way it reacted, it looked like it was just a false break off of these lows. But then we went sideways, and then we had some more weakness. And one of the key things with commodities, the longer you watch them, you'll see, is when they turn, first thing they do is make a move in the opposite direction, right? So we had this sort of ABCD down, didn't even get to this low. It was it's pretty much a double bottom. I think it was a point higher than that low, uh, the late September low. And then we shot up off of it, have a higher low, and now we've got a higher high that cleared this whole area here with our close this week.
Mm-hmm.
So this to me looks like we're ready to push higher. I like the fact that couldn't make a lower low on this push. I mean, it sure had everything was set up for it to go lower, and it didn't do it. It reversed pretty strongly. You can look at this daily bar here, Barry.
Mm-hmm.
They took out the previous day's lows, and then they closed all up at the high. So it was a nice outside reversal bar here, and then we made a higher low, and now we're pushing up. So I think wheat is done maybe hammering out the bottom. These lows now look stronger now that we're above all these highs that we pushed above those today. The key thing is on the pullback, can we hold this 573 area around the full square? If we do, we should be able to push up and challenge this half square next, which is around 652. So this to me looks like it's early, but it looks like the signs are that we are putting in a decent bottom here to trade off of. Anything else you want to add here on wheat?
Well, I'm calling it a low. I'm calling the low.
There you go. There you go.
I'm not calling a low. I'm calling the low. How about that?
Yeah, that's good.
Um,
You must have
uh,
a nice square there.
well, yeah, from the high, was it March high in
Right.
22?
Right.
We're squaring out this week for 450 days by 405 degrees.
Nice.
So that's 360 plus another 45 added to it, half
Right.
of the next square, right? So
Right.
that's where the bottom came in pretty much.
Mhm.
And we're over 400 and we're, from high to that low, 450 days. That's pretty good. And I like the pattern. Everything looks pretty good. So I think we have a low in place.
Yeah. So watch your pullbacks and, trade in the bullish side. That's what we would say for wheat. Corn and soybeans are kind of sideways chopping right now. So I don't want to really think the setup's there yet. They're also trying to hammer out their bottoms, and we'll look at those as the time comes, right? The next couple I want to talk about, the softs had some interesting moves this week. So I just want to review some of them. I think some of them aren't ready, but the chart patterns and the things that they did are worth looking at because I think there's good lessons in these charts. Let's start with sugar. Look at this one, Barry. This is a thing of beauty. So I
Yep.
was talking about looking at getting a short when we came up in here.
Yep.
Remember? And then
Yeah,
we
yeah.
came down and then it pushed up. And of course, it did this false break garbage. But look at the timing of the high and the false break.
Well, look at that square squaring out, right? That's the whole.
Perfect, right?
Yeah. Yeah.
And the other thing I want people to notice is, you think the lines are random, but when you put your lines in, at good connecting good points, highs and highs and lows with lows, look at what they give you going forward. They give you like harmonic intersection points, right?
Mhm.
Like look at how this one picked up the low that came in here that was traded off of there. And then look at here at this high, right? We connect that. It basically is a back kiss on this original uptrend line. And then look at the sell-off we got this week. And then the close. Came down to support, kissed this trend line that had nothing to do with this structure, right? This was all off of here. That's why I thought this chart was really, really cool to look at, is because there's all kind of harmonics going on with the trend lines
Mhm.
and the squares. The squares working perfectly. Look, here was the battle, 4-day battle, 5-day battle at that half square.
Yep.
Today we went up, couldn't push above it, and bam, comes down to the full square and holds the full square. To me, this looks like a better short now, but what we're going to do is we're going to watch and see what's the next reaction look like. If we come back up and fail at this half square, that'll be the kill shot, right?
Yep.
But this high looks good. It did square out. We had good timing, false break. You had your our harmonic balance point. Look how well this thing worked. It's
Hmm.
beautiful, wasn't it?
Yep. Yep.
It gave you the kiss goodbye here that you could have sold off of. So I think sugar looks like it topped. What the next structure looks like, I'm not sure of, but that's a pretty fast move off the top. Let's see where the next bounce goes, and then we can figure out if we get a decent setup. The other thing I want to show you is the monthly, which supports the view that may be it for sugar.
Hmm.
Look at where we topped,
Yeah.
right on a half square.
Pretty good. Pretty good.
Yep. So, to me, if you're long sugar, I would be careful. If you're looking to short it, let's see and you're not in, let's see if we can get a bounce that fails, a rally that fails that gives you a decent setup. Anything else to add on sugar, Barry?
Just two quick things. We are, 28 cents, $28 was 405 degrees up on the square of nine from the low,
Mm-hmm.
2020 low.
Right there. Yep.
So that was a very good hit. And we are 270 days up from last November's low.
Right in here.
Right there, right there.
Mm-hmm.
So to me, and it squared out more or less right in there. So we have enough there. And we saw the pattern, all that selling, distribution kind of pattern going on. And then,
Yeah, this is it right here.
yeah,
This is
yeah.
that distribution.
And eventually just gave out. So, and you can see how even that, after the high got made, you can see the lower highs, lower lows slowly forming, right? And eventually just broke it right there. Yeah, just right
Yep.
there.
And in here.
Mhm.
This was the holding on for dear life because they didn't have enough short positions. And then, okay, we got enough, boys. Bam.
That's when the email went out. Yeah.
So anyway, that's one. Let me show you another one that looks like it topped that we were talking about potential highs in. And look at this big giant ABCD in cocoa.
Mhm.
Now, I'm not saying short it. There's no lower lows or lower highs yet. What I just wanted to show you is some of the things that we look at and catch my eye. An ABCD after a massive run into a full square resistance, it makes me start watching it. Okay, what's going on here? What's happening? Is there something significant happening? Do we have timing? Do we have squares? And then I watch to see, okay, does this support hold here? right? Does the half square hold, or do we get through there and then get stuck under it? Do we pull back in after this initial decline? Do we make a higher low? Because remember, this could pull back to here and still be bullish. Let me show you the other thing to watch on this one. Monthly. Look where the high came in.
Mm-hmm.
Full square. Does that mean it's going to collapse from here? Absolutely not. We have to see how the pattern unfolds. It's kind of one of these heads up that we're going to pay attention to see. Do we start getting something similar to what we saw in sugar, which is a distribution pattern where we start seeing lower lows and lower highs, but it's, it doesn't look like it's catastrophic. And then does it give us something to short against? Like, do we come down and then get stuck under here where we can take the risk if we're under this half square and we have a good setup, we can take the risk because we know where we're wrong. If we get back above here, we're done. But this is just a super early heads up. Again, I want to show you ABCD into resistance with a monthly full square resistance on the high as well. Something to watch. All right, let's look at one that's in the soft group that's super
Hey Ben, one
bullish.
thing I want to add to
Sure.
this chart is if you look at the October low, if you take it from there, we have a 45-day perfect 45-day blowout kind of a run ending on December 8th.
Which would be early next week. Or
Yeah,
let's see, yeah, right there.
right there, right? So so I think after the 8th, or maybe a couple of days before, we're right in the range here. So you're right on money there.
And
And
and again, we're in another that's time frame is falling into this window. So this is
yeah,
how,
exactly.
this is how Barry and I start sort of adding significance to a window, right? Because you say, wow, this chart's doing that. Cocoa has nothing to do with the ES. And yet they're both giving you significant timing dates on their charts using calendar days or trading days. And so it adds to the significance of the window that, again, has nothing to do with cocoa, has nothing to do with ES. It's just a normal cycle timing thing. So something's going on next week. We don't know what. We don't know if it's going to be event driven or if it's just the time is going to pass and these charts are going to change. But our observational tools are heightened. We're really watching now to see the signs for the effect of that cycle. Go ahead, Barry. You were going to add something.
Well, just that we have that 45-day run that's coming up ending next week. And we have if you take it from last year's September low in 22, if you take it from there,
Down here.
right in this corner, we're coming up into another square. So it's squaring out at about 43, 49. It's a little above, but it's
Right in here.
we're within, we're
An
in the
eighth,
ballpark, right?
basically. Yeah.
Yeah, 8, that's perfect. And we're also so we're squaring in price, that'd be 270 degrees. And in time, we're 315 days from that low in September. So 315, 270 plus 45. So it's definitely an important time. And we got two things coming in. We got the 45-day blow off move, and we have that. So it's definitely something. So you picked on it perfectly.
It's something to watch. That's
Yep.
right.
Yep, for sure.
Let's look at coffee. This was one of the stars along with gold this week. Oh, there's gold. Sorry. Let's go. We get coffee. There it is. Okay, coffee we've been talking about for probably 3 or 4 weeks now. Once this low came in, it it was this push down that failed. Right, it failed to clear this square, just like it did. It failed to clear it over here, and then we pushed up, started making higher highs and higher lows. And then last few weeks we've been battling at this half square. I mean, you can see the battle, right? Look at how many days it was traversing this half square.
Yeah, yeah.
And then all of a sudden this week started making higher lows on the daily, and then boom, last 2 days big moves higher. So this to me solidifies our low, and now we're trading, as we thought earlier, we were trading to the upside without when we were doing it here, there was a little more risk, right? Because we hadn't really cleared that half square. We've cleared it now. Now it's can we take out this full square, which is around 192 and a quarter. We take that out, sit on top of that, then we're going to attack the highs here, the April highs, because we'll be attacking this half square. And then after that goes, we're going to be attacking the highs back from 2022. But coffee looks really good. Let me give you a weekly and a monthly view here. This is how the battles happen at these squares, right? Look at this battle at the half square, right? First, we came up and it was resistance. Then it was sort of mean reverting around it for 3-4 weeks. And then look what happened this week. The higher lows and higher highs took over and we shot up. That's on the weekly. Let's look at the monthly. On a monthly basis, a big breakout is coming, right? So we've already made a higher high this month as opposed to November. So we have another up bar after we had the original outside reversal. Remember we talked about how important these outside reversal bars were, especially on a monthly and weekly basis. Well, there's your outside reversal. There's your follow through. Now we're getting another follow through bar. So the next thing I'm looking at is this half square on the monthly, which is just under 200. That's the next big sort of longer term spot. We can clear 200 and sit on it. It opens up 250 on a monthly basis. I know you've been all over coffee too, Barry. Anything to add here?
Well, we got the breakout, so it's really, I mean, my number is 175. We have to really hold above that. That's 50% of the square that I'm using, square 60. And you have 171, so I think we're close enough. As long as we can hold above that, we're good.
Yeah, your 175 is good structurally because that's where these highs came in here.
Okay, well, it's 50% of the square 60, so we're good.
Very nice. Yeah, it's a good looking chart.
Yeah,
it looks like it's good. Let's shift over to the metals. Barry covered gold very well, covered copper very well, so I won't bore you with a review of that. Let's do silver. But gold and copper look really bullish, look very, very good. Trade the levels and you'll be fine there on the bullish side. Let's go to silver. Silver had a very good week. And here's an interesting view of silver. So silver has been in this major consolidation for almost a year, if you look at it, right? We deviated out of it a little bit here, but if you look at from this basic, take it from the full square up here down to this half square, and that's basically had price captured for over a year now. And now we're making this powerful move up out. We called in this bottom that came in right on the half square. Look at how well that held for 3-4 days. Then we moved out of there, got up on top of the full square, did this little, I don't know, we have to come up with a catchy name for what this is. This is the head fake move, right? Every time we see it in the commodities. Before it makes the big move up, what does it do? Cleans out the stops. Gets below
the second wave is what it is, right?
Yeah, gets below the full square, and then boom, boom, boom. I mean, doesn't even give people a chance to get in. Close on the high, close on the high, close on the high. But this is the move you like to see, right? Closed on the weekly high. I drew in this ABCD to see a possible target, and you can see it's right around the full square, right around the April, May highs. So that's our logical target right now if we're only doing an ABCD. But if this thing really gets going like gold, maybe we're pushing to all-time highs.
Yep, sure.
And we'll see. Anything to add on the silver daily? I'll show the monthly as well.
Well, I think well, there you go.
Monthly, we're up against it, pretty close. So we got to know that there's resistance in here around 2660, 2670, and you can see why. Right? It's this cluster of highs here, the lows that we saw in 2010, 11, 12. So pushing through and getting up on top of that would be huge. Really, really huge, because as you can see, it had difficulty, in 2020, 21, and 22 in this area. So it's really important how we handle this area coming up here soon. If we push through and sit on top, I mean, you're looking at $38 silver if we get up to the half square, which would be next. Let's go back to the daily. You were going to add something?
Well, I was just going to say that if any pullbacks, counter trends hold about 24 and a quarter, I think we're in a very strong position.
Mm-hmm.
24 and a quarter is the level. And the other number is really, I have some resistance at 26 and three quarters, which is 180 degrees on the square 9 from the low in September.
Right about at the ABCD target right there.
Yeah, and it just happens to be 72 degrees up from that same low in September of 2022. So I would say, it should get there, but after that, we really need to see if it can hold above that. That would set up the next leg. So.
Agreed. All right, let's finish up real quickly on that gas. Not a lot to say there other than it's teasing with the level, the important level, which is the 282. It's coming down to fulfill the ABCD, which is, I remember last time, a couple weeks ago when we talked, Barry, your do or die was around 265, which is right where the ABCD is.
Mm-hmm.
So that's where we're heading. It looks like if we come down and complete that, then we have to see, can we push back above and get on top of this full square? So, I mean, the bars are getting smaller. We're crisscrossing the full square at 282. So to me, it looks like this is the pre-move in the opposite direction head fake. So, maybe we come down and finish up the ABCD. Maybe we don't. Maybe we spike down. But, again, there's a trend line, the old trend line convergence there. There's the ABCD. There's your 265, which is the 3/8 of the square. So I mean, a lot there. I think it's a normal correction. And if you go back and look at how this thing goes, you get spikes up, sharp pullbacks, and then the next spikes higher. So until we actually take out previous lows, like in here, if we came down and took out these lows here, I'd say, okay, so we're doing something different. For now, let's watch and see if we finish that ABCD or if we hold this full square. And when we break the trend line, we should be off to the races again here. Anything you're seeing differently or any comments you want to make on it?
Not differently. I think the April lows are good. They came in 180 days from the high in August of last year. And we're just putting in the bottoming. After a really hard drop like that, we don't just spike up in a V. So it takes time to, put the bottom in.
It's building. It's building.
It's building. And we're almost, by middle of December, will be 180 days from the low in April. So that could be, the turning point. We'll mess around here and maybe go low to low, 180 days, and then turn up. So
there you go.
Possibility.
Yeah.
But 298 was my week number before. And we did slip under that. So the next level I have is 265. I think, well, it's right.
Yeah, really the ABCD.
Yeah,
right there.
So that's a really critical number now. So see if it holds it.
Yep. That's the idea. I mean, that's it for me. I think next week is a pivotal week from a cycle standpoint. The fact that you were coming in with your counts all pointing to next week as well really makes, heightens my awareness that we got to look out and watch and see what's going to happen next week, because a lot of turns can happen in these markets. The one thing I wanted to talk to you about, Barry, we had this kind of 2-week period where the ES was just chopping sideways in a tight zone. What is it that you do? Because I know a lot of people have problems when we're in things like that, where they try to trade it and they, basically get death by 1,000 cuts.
Right.
What is it that you do during times like that? I mean, you're not playing tic-tac-toe or you're not, playing solitaire. What do you do market related during those times that can help you sort of stay out of the blender, as I call it, or the chop zone, in trying to trade in there while still preparing yourself for either the move in that market or the moves in other markets? What is it that you do when we are stuck in a zone like that and you're waiting for the breakout?
Well, I look at stocks.
Mm-hmm.
I scan stocks and see what's happening. If any of those are ready to move. I look at other. We had plenty of commodities that were moving, so you can focus on those things. So it's
Sure.
good to have several things to look at. If one is not moving, then you can look at something else. That's the simplest way to put it. But I think the fundamental part that it to understand and that would help stabilize, let's say, uncertain times, would be to have a very clear cut rule set when you should engage and when you shouldn't. You know,
And
and
price levels designed to help you decipher, oh, is this a place where I need to move or not?
yes, and I mean, this is what really differentiates good systems or approaches from not so good ones. Let's say weak ones. If you have a very simplistic one, like let's say two moving average crossing, well, last week you probably gave back, most everything from the last 6 months,
Right, right,
right? So clearly, that kind of a system doesn't work on everything or
right,
in every situation. So you want to develop your system that can withstand any market condition and sort of keep you always on the correct side.
mm-hmm.
And like so I can just speak on what we were doing last week. I mean, all week we were posting the level, 55 and a half is the key level, that's the
Right.
support. And a lot of people traded off of that and that worked out just fine. So you'd have to have some kind of a system where you want to trade it, even though it's sideways. There were a lot of trades that set up on the lower time frames using the fuse lines,
Right.
and they worked out pretty well. But if you're just, let's say you were trading the 30-minute and you can see the risk is not worth it, like even though you could buy the 50, 45, 50 and, cover when you get to 45, 75, is that risk worth it for that kind of a small move? And other times you can have a 50-point move for the same entry risk, right?
Right.
So I think one way to look at it is the risk worth the reward? Do I have that kind of upside in this trade?
Right.
So you want to, at least 3 to 1, if obviously you want more. And so that's one thing I look at. I go, hey, is the risk reward here? Do I have to risk more to get in at this point? Or is my reward lower than what the system normally gives me? And so that's kind of my approach. And also the way I know you have too, the way we built our approaches, we really look to get in at points where a move is about to start, not when it's about
Yeah.
to end, right?
Correct. Correct.
So that helps, even in a chop, you can always try to isolate the lower boundary like we did 45, 50 for the last couple of weeks.
Right.
And so it really comes down to that. That's when you need the technical stuff. If the market is just making higher highs, higher lows, just trending like there's nobody's business, then you don't really need any skills. You can just buy any day. Yeah, like when we had the bull market in the tech and everything, you just throw money
Yeah.
in the morning and boom, you got money.
Right. Right. No,
It's
that's
like
right.
anybody can do it. And I think we're coming into a period where that's, especially the next couple of years, I don't think it's going to be that easy. So you need some technical background. You better study up a little bit and develop some techniques. So you have something reliable to lean on. You don't have to guess at it. It's not automatic, obviously. So I think it comes back to your degree of knowledge, and how you apply it. You have to go back and test things by hand and know what you're dealing with, really, right?
Well, one of the things you and I have talked about in the past too is that if you see a market's not trending, don't sit there and stare at it all day because your mind will then create, oh, there's an opportunity here. I could have done this, or I should do that, or I missed this. And you start with that mental sort of path on making bad decisions. And
Yeah,
that's why, looking at
yeah,
other stocks, looking at other markets, doing your research. For me, I'll when the markets are like they've been the last couple of weeks, I'll start taking a deeper dive in some of my cycle work because
exactly.
it's,
Right.
it's a good, I don't want to sit there and stare at the market and manufacture a setup that I think is good when I know our system, if you're stuck in a chop zone, you wait till you break out and then you trade after the breakout. So part of it is not having your mind see something that's not there because of your desire to do something. And
Absolutely.
a lot of times, the mistakes people make in trading is they think, oh, you got to do something. A lot of times, the best thing is doing nothing,
Mm.
right? If the setup's not there, you don't want to do anything because you don't want to get in a trade where, as you said, the risk reward is not, skewed heavily in your favor because, probabilities are you're going to be wrong a certain amount of time and you got to be bigger right than you are when you're wrong. So I know for me the mental aspect is identifying that you're in the chop zone, waiting till we break out and doing something else, while that chop zone's happening, because that anxiety of, oh, I'm not doing anything does come up.
Yeah, yeah, and it comes back down to really, we used to talk about market structure a lot. So it's really about, you know, you just said the key thing, as soon as you know it's going sideways. So people need to know, when is it going sideways? When did it begin going sideways, right?
Mm-hmm.
And you start there, and then you have to know, well, when is it leaving sideways pattern?
Right.
So once you know the patterns that coming into a sideways consolidation and when it's leaving, not that you have to know it to the exact bar, but within reason. And the component that's really missing that'll help you, like if you have 100 problems on one side to solve and there's one on the other side, if you solve that, it's automatically solves the other 100.
Right. That's right.
Well, developing a decent system is that one thing. If you solve that, it'll help you support you on a lot of other things. Because if you don't have a green light, you're not going to cross the street, let's say.
Well, and to
You
your
know?
point, that's why identifying like when a leg ends is so important, because it doesn't necessarily mean that a trend is coming out of that. One of the possibilities is sideways
Yeah,
after
yeah,
a leg ends.
yeah, yeah.
And
Exactly.
so the result of being able to identify when a leg ends is you can catch those consolidations earlier because hey, something ended here. Now what's going on? Well, we're not making higher highs and we're not making higher lows and we're not making lower lows and we're not making lower highs. We're just sort of chopping around. Then you say, okay, that's the chop zone. I'm staying out. Right. I'm going to wait. I'm going to define the limits of it, and then I'm going to wait for the breakout and wait for it to clear. But it first starts with saying, well, a leg ended here. And I think that's one of the things that when I first started, I fell into a trap. Is like you think, oh, every high should result in when the trend changes into a sharp move down, or every low should be a sharp move higher.
A whole nother leg.
Right. And that's a misnomer, because one of the things that catches a lot of people is, yes, that trend coming into the corner has ended, but not a discernible trend has come out of it. Right. It's a sideways correction where you and I always talk about, we say, it's a correction in time and not price. It just goes sideways and burns time, or it chops around and it burns time, as opposed to being a directional move out of that corner.
Mm-hmm. I mean,
So,
we have three things to work with. We have the structure, we have price levels, and we have time. If you can, the whole time we're trying to align those three, working with those three things. And so you have to be aware of all three. What's time doing? What's price doing? What's structure doing?
yep.
And when you talk about, knowing when something ended, well, that's the time to cover your things and you pull up your stops and do all the things you're supposed to do. And having something like squares or square nines or whatever method that you use, but it needs to give you reliable levels that consistently gives you something that'll keep you on the right side of the market, right?
Something to trade against. Yep.
Something to trade against. If you can do that and you have tested it and it works for you, that's all you need. But then you have to really use it along with structure, right? Did it end? Okay, if it ended, then I need to cover. Ending is not the place to start a new beginning in the same direction. You want to wait to see how it develops. Does it get over something else? Is it going to
Mm-hmm.
continue? because squares doesn't mean anything if the bull market is strong. It's just going to go through everything.
It blows through them. Yep.
Yeah, it blows through everything. So, who are you to put a trade on there short if the thing is just blowing right through everything? So you just wait to get the next confirmation. The key, I think, is like the ability to go in and out at different levels and as the structure changes, and that fluidity has to be there. It's sort of like a dance, right? Once
Yep.
you have that, and the way to do that without fear is to make sure you understand your risk reward in your system that you're using. So if you know your risk is always $3, well, fine, take the trades because you know the odds are in your favor.
Right.
If you follow. So I mean, it takes. I guess what I'm trying to say is it takes more than one rule to keep you out of the trouble.
Correct.
Out of mental
Yeah.
trades.
I think your explanation of, there's price, there's time, and there's structure is really important,
Hmm.
because that you have to look at all three. You have to know price and time to find a corner, and then you have to understand structure to say, okay, what comes now after that corner? What's happening in that market? And the structure tells you. If you're seeing, the same level of highs and the same level of lows, you're in a chop zone,
Yeah, exactly.
and you're
And
going
yeah,
sideways.
and once you know, like for example, I can speak for squares. Once you know when something's squared out and the leg ended, then you know what the pattern should be on the other side. So then
Right.
that's the one that you trade.
Yep.
Um, yeah,
And then we're talking about that in this broadcast. We're talking about three different things on the commodity side, which is a perfect example. We can see something ended in
mm-hmm.
cocoa potentially, in sugar potentially, in wheat. We just don't know how it's going to unfold, what comes next. Now we got to watch structure. Now we watch the levels on the squares. Now we look at, okay, time has passed since the low. What's going on? What has changed in the structure?
Yeah, yeah,
And that's how at least for us, that's how you and I play this game.
yeah.
And that's, what we're trying to impart on people is it gives you a framework with which to look at this price action.
And speaking of people, impatient, being impatient. The other thing to remember is any given leg, you don't want to try to play both sides. That's really, really entry level. You want to pick the trend and only trade on that side.
Right.
So you don't want to like buy and then as soon as it makes a high, you get momentum high and your RSI crosses over. You don't want to be selling it into this huge bull leg.
Right.
And then as soon as it bottoms, you buy it, and then it turns down, you sell it again, and you can't do that. It just get chopped up everywhere.
Everywhere.
So
Yep.
so you have to. That's why you want to know where the corner is on a weekly, on a daily, and then the sort of the tide is on your side. Tide is with you, so you want to go with that and just take the long trades on your system. And once we know, okay, there's let's say the high squared out. Well, then you wait for your next sell signal.
Yep.
That's why we call it. We have to settle above this level or that. If it doesn't settle above it, then we're looking for a sell signal. If it settles above it, then we're looking for the next buy signal.
Right.
So it's a level by level thing, but it's just one approach. Obviously, there are people trading all different kind of approaches, but this is just one, and it makes sense. And the problem is with all these packets of indicator packages, and we have
Right.
hundreds and hundreds of indicators, and so most of the people are just looking at momentum and ignoring the time and price in terms of
Right.
geometry and structure, right? So it's easy to get sort of blinded by the shiny object
No,
of
for sure.
indicators
Well,
and you know
and that's that holy grail desire of everybody. Like there's one thing and you're going to have the keys to the kingdom, and it's just not true. Anyway, I thought, given the frustration that I heard from some of the followers and in some of the interactions this week with the ES being stuck in this range, I thought it was a decent topic to end on. And thanks for your insight on that. I know this week coming up, I didn't have any idea Barry had all his time counts, which were pointing to next week.
Yeah, we didn't talk about it.
We didn't talk about it beforehand. I knew that I had, a big sort of long-term sort of cycle window that was coming in next week. So the fact that both of those things are happening and we're seeing a lot of this price action we're seeing, which is, things at critical spots where legs could end and things could change. It is a very important week. As Barry said, it's not going to be a boring time from now to the end of the year. So Don't get distracted and thinking, oh, it's the holidays, nothing big is going to happen. There's going to be big moves.
Mm.
Rest up, be ready, and pay attention because I think we are in for an interesting ride for the next 3-4 weeks. Anyway, have a great week, great show, good wrap up. Everybody have a good weekend, and we'll talk to you next week.
Thanks, man. Great job. We'll see you next week. Bye bye.
Take care.
Thanks.
Bye bye.